Hi, Richard here. It's Wednesday afternoon, about 5 o'clock, 17th of December. And what's causing all this fuss is the US dollar. And we've been on this theme for a while now, starting with the US dollar weekly chart. As it's pushed up and hit this descending trend line, the daily shows it a bit more clearly. And we can see that it hit it, pushed through and then pulled back slightly. The big question is now whether or not we're going to get an ABC correction down, given on a shorter time frame this is a very clear 5-wave impulsive move up. Those 5 waves, they signify trend changes, and indeed this was a Monty of a trend. Everyone thought that the US dollar was bearish and just about to implode. Well, of course, right at that contrarian point we looked for the market to go higher. So the expectation is, as we look at the major indices, that we're going to get a pullback, and indeed this is a mirror opposite of what's been happening in the US dollar. And where's it going to go to? Well, we can have a quick look at a Fibonacci retracement to do that, and we'll take a starting point from this wave 3, and that's the expectation that we've come up for a 3. We're going to come back to a 4, somewhere around 10,680 or possibly 10,500, and then we'll continue on up for the Santa rally. That's indeed if we're going to get one. So the target there would be 11,800 in the longer term, but the entry point, if we get solid support, is for somewhere around this 10,680 or possibly as low as 10,500. But yet I have to say that there are some Elliott wave enthusiasts out there that believe that this is the recovery high top, this doji star here, and that it's very unlikely for that high to be taken out at 11,440 as an indication. So down and up, question mark. But this is the Australian market. You can see where it closed on its lows today. Really pushed down heavily. It took out an interim target that we had in here at 4,669, I think it was, and it looks like it's en route to 4,616. And indeed, if it continues further, then we can take that measurement and say that 4,540 odd on the SPY would be a reasonable target, of 4,475. So that will happen in very short order if it comes down. We've seen what happens when it unloads in the past. Over here, that was a very, very straight shot down. Here we've got this ABC up, and I would expect this to be about 4,500-ish would be the first point of resistance. Moving on to the Australian dollar, you can see also it mirrors the US dollar increase up. The Aussie dollar has pushed down through the weekly reversal, so that means from a trading perspective we look to sell the rallies as they occur. For example, here, presuming we get some support, could only be minor, but we would sell any rally down for a target at about 96.50. That target of 96.50 has been in place for a long time now, and it could even push lower if we get a bit of a down leg to 95.50. That would be a breakthrough this resistance, but it has been very strong resistance in the past, as we can see, or support I should say, and it could be support again, and that would tie in with a higher dollar leading into Christmas. The euro, similar story, almost down to its channel. This is an 800 pip loss, really short order. I mean, that's a very, very significant drop, and it just tells the story about what's happening in Europe and the concerns over the sovereign debt issues. But from a trading perspective, we've looked for a modicum of support, although I wouldn't be trusting any or fading any upswing. I'd be looking to actually sell the rally when it occurs. So the rally points would be on the extension, and if we took it from there, would be, I'll get rid of this, would be around 1.3772 It's a good Fibonacci number, 1.3869 or 70, and 1.3967 would be a pretty good target, but I doubt whether it's going to make it that high. It might just only pull even to below the 38.2% mark. But certainly it's very volatile, very impulsive on the way down, significant change in trend, broken through on the MACD, so we'd look for a bit of a retest. If not, it'll push straight down to this channel line and then retest. Wanted to show you the financials. Testing the support line. We said this on Monday, but when we saw that there was a big up candle, looked very bullish, but of course with the sell-off overnight, 2% sell-off on the Dow and a big down day for the ASX 200, the XJO, it's testing this line. In the event that it breaks, then the target would be low as 4,060 as a first go. That's the financials. On gold, it's found some short-term support below what we would consider as this most first level support, which runs all the way back to late July, and it powered down. My goodness, this is an impulsive move. Would expect a retest, could even go as high as the old target at 1357, and then head on down to 1323. And in the event that it all looks very bearish, and indeed we see significant strength on the US dollar, then 1250 would be the target, which is the long-term support line. Just to wrap up on oil, 3 massive days down, real significant break. This is a wave 5 high. You can count them up: 1, 2, 3, 4, and to finish on 5, a previous resistance, and a big doji reversal candle confirmation, and short it went with a target of $82, and then I would say that we could extend that out, and the next drop down after a bit of an ABC up would be down as far as 79.80. So that's the wrap for today. For more, go to the marketforecaster.com.au. Cheers.